Good morning and welcome to today's pre-market report. Now today we'll take a look at HCL Tech as it has released its results, and we'll take a look at what the results are showing plus what's its equity and option trading plan. Apart from that, we'll take a look at the Sensex index as it has its expiry today. I'll take a look at what option buyers and option sellers should do plus what are the key price levels. Now usually I would cover the news, but I'm not going to bother covering the news today. This is, I believe, the market this week, as I said in Sunday's video, is going to be more result specific. And if we even see what happened yesterday in the markets, it's not really based on any news. The market was absolutely destroyed. If we to get out of the Nifty and BANKNIFTY space and look at the big other indexes, let's say Nifty Mid Cap, Nifty Small Cap, Nifty Realty, all of them just basically had an outright collapse. And it's not a new trend, as the past few months have been very bad for the Indian market, as so many stocks are nearly 50% of their highs. And now the big question is, when will that stop? Now, according to me, it will all depend on how these results come out. As if they are positive, then we may have a temporary slowdown, after which dead cat bounce and then a resumption of the primary trend, which is only going down. Now coming to HCL Tech, now HCL Tech's results are actually good. This is the profit after tax rose by 8.4%, and then the revenue basically also rose by 3.6%, and the EBIT rose by 8.6%. So that is a good thing, and even the EBITDA margin basically rose by 90 BPS to 19.5%. Plus they gave a dividend of 18 rupees a share. So all is good. According to me, HCL Tech's results are better than the results which TCS released last week. This is as when we look at HCL Tech and TCS, they have one common problem, is the rupee depreciating. This is as with the stock market falling, the rupee is also every day just losing value. Literally it opens and then just goes down, opens then goes down. It's a holding pattern. So when we take a look at it, the profit now in terms of what's happening to the INR and why I'm doing so is a lot of foreign investors are in India. So they're looking at it in that perspective. In that perspective, the profits is basically in line. It's not good. But why I'm finding HCL Tech's results a bit better is when we put it percentage to percentage in terms of the numbers. I think they have come out ahead. So that's really it on the results front. As I said, it's good if you look at it overall, but then when you put the Indian rupee into perspective, that yes, the Indian rupee is just dropping like a hot potato, and then they come in line, so it's average. So that's my point of view on it, and let's see how the market reacts to it today. Now we'll take a look at the chart. And HCL Tech chart is actually quite impressive, according to me, because as I said, if you open any stock, you open Reliance, you open HDFC Bank, you open, literally you just pick a stock, you pick IT stocks, you pick financial, you pick real estate, you pick any sector, most of the stocks have had a fall at least 20% minimum, and even some to 50-60%. But HCL Tech has managed to hold itself, and that is another thing which supports my notion that they are actually doing better than a company like TCS. TCS is naturally way bigger, but these guys are doing fundamentally. The results which are coming out are much better, and it's showing in the charts as they have not fallen. The huge selling the Indian market has had the past few months has not managed to take them out. So now what is my view for HCL Tech going ahead? Now according to me, the big positive is it has not fallen, and so now when there's a rebound, this is going to be one of the strongest contenders going up. But now the only issue is it is so up already that I don't think it has that much room. That's why the levels are that close to the price point. Now if I take a short-term view, let's say the next few days, according to me, as long as HCL Tech trades between the resistance at 2040 and the support at 1940, it's not really going to go anywhere. It's just going to go range bound. However, only if we break 2040 or 1940 on the downside, that is when we're going to get a one-sided move. If we break 2040, then next target is 2100. Break that, then 2150 opens up. On the downside, if we break 1940, then 1880 opens up and 1830. Now, so according to me, as of now, if you want to trade these results in, I think if you're doing an option buyer, then it's only intraday. Option buyer does not have anything to do in positional here, because this is a box range and option buyers will just end up losing value here. The sideways movement will cause you to decay. But if it breaks 2040, then you can go long to 2100 and 2150. On the other hand, if it breaks 1940, then you can short it. Now, what about equity traders and option sellers? Now, according to me, equity traders, if it breaks 2040, that's when they can consider a short-term equity trade. I'm not talking about buying HCL Tech today and then thinking you're going to hold it for 3 months, 6 months. I don't think the market is ready for that, as all of us can open any stock and we'll see it has been demolished. HCL Tech is lucky enough to have not been demolished, but if its number comes up, then if I press the sell button, it will be demolished too. So now that is why I'm saying it's a short-term trade then to 200 and 150. Option sellers on the other hand, this is in fact one stock where I'm right now holding no option sell position. And I think if you're an option seller for January series, you can sell, if you're aggressive, you can sell calls above 2100 and puts below 1880. If you're cautious, then go and sell calls above 2150 and puts below 1880 again. Now, why am I taking further out stance from the box range, even in the aggressive part? Simply due to the results, and on the top line, if you don't include the INR's depreciation, which most will not, then it will have a sudden jolt up, and then the guys who will go up with it, basically by the top, will end up coming down. So 2100 resistance, I believe, will play a bigger importance than 2040 if we look in terms of the full January series. 2040 plays importance, let's say, for the next 1-2 days in terms, but in the January option series, if you look at full, 2100 plays a bigger importance than that. So that's better to focus on that for CE cells, according to me. Whether I will take an option sell position or not, I am not sure yet. I want to see how it opens. If I see at 2100 my indicators flash sell, then I will enter. Otherwise, I think there are better stocks out there right now you can do option trading in than HCL Tech. Also, if you want to know how to get the indicators, then WhatsApp to the number shown in the description box below, and someone will guide you onto how to get them. Now we're done with HCL Tech. Let's take a look at the Sensex and what you can do with it in this expiry. Now the Sensex, I'm looking at the 14th Jan 2025 chart. So if you're trading it, then these levels will only be applicable to that chart, and not, let's say, if you go and open the Sensex monthly chart, as the levels will naturally not be applicable, as each futures chart has different price points. Now, according to me, where the indexes have come is now everything is reliant on one index, which is the Nifty. This is the Nifty, BANKNIFTY and Sensex are correlated. Okay, mid cap and small cap are different. And in fact, like yesterday, if you traded the Nifty mid cap, you see it just would not hold anything. It would just up, down. Any attempt of forming a white candle was getting completely, white or green depending on your screen, was getting completely demolished. Now, according to me, the Sensex right now is more interdependent, because the leader in this pack is now the Nifty. This is as the BANKNIFTY and Sensex are trying to put brakes on the fall, according to me, but the Nifty is still in a very bearish mood. So until the Nifty changes stacked, that is only when we'll get a bottom forming and a box range forming. So everyone who is trading the Nifty, who's trading the Sensex Expiry today, keep the Nifty chart open, as according to me that will give you more of a guidance to the options than even Sensex own chart will give. Now, to the option movement, not the option prices naturally. Now, what is my trading plan? Now, according to me, as long as Sensex is between its small box range of 76,300 to 76,650, nothing's going to happen. And even in this zone, don't try option buying, as you'll get wiped out. Your trade will not work out, according to me. The only time you can try to do it is when it's in a bigger box range, which I'm classifying as 76,650 to 76,050. This bigger box range has enough points that it can form, let's say, if you open the 5-minute chart, let's say it can form a three price bars in one direction to give you decent intraday movement for option buying. However, the smaller range you will not. So focus on the bigger range. Now, I personally will not be looking to do option buying in the Sensex for this expiry, as I think this box range will be just too hard to trade in it. I would rather then focus on the Nifty and BANKNIFTY right now for option buying than this. But option selling, if you're an aggressive option seller, I think you can sell calls above 76,950 and puts below 75,800. Now, most of the viewers of the video will be asking, my aggressive, I usually go, I would say 76,650 and 76,050. Why I'm not saying that is due to the condition the market is in. Anyone who was traded yesterday or the whole of last week knows that every basically rule of support is being demolished by the bearishness. So it's better to, even in an aggressive part, to take a bit of a cautious stance. So according to me, that is my stance on that. If you're cautious, then I would say basically go above 77k option sells on the call side, and on the put side go below 75,500. Premiums will not be that good, but there are certain expiries which you can think you can trade more aggressively, but I don't think the Sensex expiry is that. But now there is one twist to this. According to me, I will be entering option call and put sells at the same time in the morning. Towards the end of the day, in the latter part basically, not after 3, let's say after 132, if the Sensex is roughly at, let's say, this support or this support, then you can sell puts very aggressively, according to me. On the other hand, if the Sensex is either at 76,650 or 76,950 or this resistance, one of these three, then you can sell calls very aggressively. So this expiry, I think Sensex is better to trade cautiously in the morning part until 132. Then after 2 is when you can hit that aggressive button, depending on where it is close to those resistance or support levels. So that's my trading plan for the Sensex index. This expiry is not a very clear trading plan because of how badly the markets have been doing, and basically everyone is looking for a bottom and it's not holding any bottom. So that is causing a lot of confusion in the indexes in terms of option selling. Option buying is clearer, but according to me, today especially, I with clients will be entering the indexes Nifty, BANKNIFTY and Nifty Mid Cap, not Sensex, in positional options quite heavily, as I think they are now going to present an opportunity to option sellers. And I have not decided exactly which approach I'm taking. I want to see how the market opens. Then I will decide which calls, which puts and everything I want to sell. But I believe it's going to provide a good opportunity to option sellers in positional trading, monthly options, to make good money. I'm not going to do the Nifty weekly options, as the premiums are pretty rubbish these days due to all the new laws which came in and they have affected that. So it's better to do monthly option. So that's it for today's video. Thank you for watching. If you liked it, then hit that like button and subscribe to the channel, and also click the notification bell. Thank you.